and that is our viewer queries section. And for that, I have with me Nisreen Mamaji, who's joined today. Nisreen, good evening and welcome to the show. I think we also have a viewer. Okay, so I think let's take Abdul Khan's question. He says that he's 58 years old. He's retired from the army. He started his SIP of 18,000 per month, and he's got a couple of names. I think you've got the names on you: Nisreen Kotak Small Cap. He's got Quant Mid Cap, Nippon Multicap, Robeco Blue Chip, Motilal Oswal BSE Enhanced Fund, UTI Nifty 200 Momentum 30 Index Fund, Quant Small Cap, and any changes that you might want to recommend. He started his SIP, I think Jan this year. That is what he's written. And yeah, beyond that, we don't have any other detail in terms of goal alignment or the corpus that he wants to accumulate. But considering he is retired, I think this is going to be his, it looks like it can be his wealth creation portfolio post retirement, or something that he might want to use going ahead later on in life. So, how can he go about it?
So I'm not sure when he started the portfolio, but now that he's already retired, the portfolio looks a bit on the aggressive side. So I mean, he should not inculcate any, undertake any capital gains by redemption. But if he's still continuing the SIP, then I would suggest that he stops one of the small cap funds. He's got Quant and Kotak. He can stop one of them and invest in a balance advantage category where if there are some emergency medical needs or any other shorter term requirement, then he can withdraw from there. So if you're not needing funds for at least 5 years or more, and you're not going to be using this corpus, then it is fine because it is on the aggressive side. And I'm assuming you've already finished, at least 5 or 10 years in this current portfolio. But if you think that you will be using this corpus now that you're retired for making withdrawals, then a portion of it. If you're continuing the SIPs, then stop what you are doing, but invest at least a portion of it, say 20% of it, into a balanced advantage category or a aggressive hybrid category, which would be redeemable, easily and will not be as volatile as the rest of the portfolio. So this is definitely a good portfolio. It's aggressive. It's probably going to give you good returns even going forward. If I calculate, on the basis of say 12% compounded annualized growth rate, in 5 years you would have yielded about 1.47 crores, and in 10 years about 4 crores, and in 15 years about 9 crores. So it's a very good portfolio, and definitely you should continue it, but be little careful on the holding.
Sure. Nisreen, let's move on to our next question, which is from Rajesh, and he says that he'll be retiring soon in almost 2.5 years, and he plans to purchase a house worth 1.5 CR. To avoid any monetary distress, he wants to generate corpus of at least 50 lakhs before retirement, and he wants a strategy to accumulate this corpus. Now, we definitely want to know the amount of investment that will be going in for this, and also retiring in 2.5 years, and after that purchasing a house almost of 1.5 CR. I hope the corpus he needs to accumulate in 2.5 years, but then we don't know the amount of investment that needs to go in for it. If I have to ask you a rough calculation on how much he'll have to invest, and to buy the house first, 1.5 CR, and then 50 lakhs before retirement. So technically, these are two goals that we are looking at,
Yeah.
Nisreen.
Thinking he needs about say 50 lakhs after 2.5 years. For that, he will need about 41.4 lakhs right now because he's got only about 30 months left for investing. And I would like to recommend to him HDFC Balance Advantage Fund for about 11 lakh 40,000, Kotak Debt Hybrid Fund for 15 lakhs, and ICICI through multi-asset allocation for about 15 lakhs. So this is how we can invest 41 lakh 40,000 at an investment rate of about 10% because he's given us 2 years. So, we'll have to monitor this very closely. We should basically be looking at 8 to 10% at a compounded annualized growth rate. But if we take 10%, then he needs 41.4 lakhs right now. As far as the property is concerned, he needs about 1.5 crore. So he will need at least 1.2 crore at this point, between 1.1 to 1.2 already ready. Maybe in some sort of pension fund or his, EPF, gratuity, etc., which he's planning to pick up. And then, he must have already thought about how Rajesh is going to allocate. So, Rajesh, you must have given this some thought already, how you're planning to fund the property. And I'm assuming that you already have some readily available, instruments in 2.5 years from which you're going to be investing in your property. As far as the corpus goes for your retirement expenses, currently the corpus should be valued at about 41.4 lakhs, and you can invest it in the way that I've already explained earlier. HDFC Balance Advantage Fund 11.4 lakhs, Kotak Debt Hybrid 15 lakhs, and ICICI Pru Multi-Asset Allocation 15 lakhs. So all the very best, and I hope that your retirement is a good one.
All right, Nisreen, let's move on and let's take up. All right, I think I have Sameer on the phone line with me. Hi, good evening, Sameer. You're calling from?
Mumbai, Goregaon.
All right. So, you want to invest in mutual funds and you want to start with investing 1 lakh lump sum. This is just going to be a one-time investment, or
Yeah, but I'm
you might just
47
want.
years old, so sorry to
Sure.
interrupt. I'm 47 years old, so it will be long time for long-term investment. So I'm looking for a short. What is a great investment for me as per my age?
Okay, so it's a long-term investment. So when you say long-term, how long are we talking about? More than 5 years?
Yeah, more than minimum 5 years. Yes,
Minimum 5 years. Have you ever invested in equity market earlier?
I have invested in that, but earlier I had invested, but I want to invest it right now also. I have done
Got
it
it.
earlier also, but yeah.
So you
In
have an
equity, I have.
existing portfolio? Do you have an
Yes, yes,
existing
I have.
portfolio
Yes,
of
yes,
mutual
yes,
funds?
yes. I invested in some SBFCs, then Nippon and all, like 4, 5. I have invested 5, 6 years
Are you
before,
still
but right now I
continuing
would
that
like to invest.
investment? Are
Sorry.
you are you investing in those funds even now, or those are just lump sum
Yes, yes, yes,
investments?
yes, yes. I'm conversing. I'm investing for long term only. But
Okay.
after 5 years, I thought so to again do it again.
Sure. So the reason I'm asking you is because if you have certain funds in your portfolio, we don't want to give it the same name and sound repetitive. We don't want to repeat the same kind of funds
Right.
also for your portfolio. So do you
Right.
have the
Because
names on you right
sorry
now?
for interrupting. Because what is happening, I don't know right now where to invest. That is why I'm confused. Because already SDFC, Nippon, Bandhan, I have already invested. So I want new names. So which
Sure.
can grow.
So it's so great you have the name of the EMCs. Do you have the fund category also with you? What type of fund are those?
One is a flexi, one is a mid cap, and one is a large.
So you have HDFC Flexi Cap,
Yes, yes, yes. SDFC flexi cap
one
is there. Nippon is there.
Nippon what?
uh,
Nippon what
Nippon
category?
large is there. Large cap is there.
Nippon, okay. And then,
And one is, I think I have invested in ICICI Blue Chip long time back. Almost 6 years I have taken a SIP of that. So it is
okay,
also means growing.
great. Apart
So
from
I
this, what
want
other
new
fund do you
names.
have? What other fund do
Uh,
you have?
uh, I don't remember actually as of now, but 3, 4 I remember right now because I have 4, 5
Okay.
with me. Yeah,
So having
because I
different
got a new name.
AMCs is a
So what
very
is the
good.
market?
Sure. So having different AMCs is a very good thing. But you also, more than the AMC's name, you also have to take care of the category. That category should not be repeated, okay? Because you might have to see the funds portfolio in case you want the same category from a different fund house. All right, I'll go to Nisreen directly. Nisreen, 1 lakh rupee lump sum, 5 years minimum, and the
Okay,
flexi
so
cap, Nippon, and two blue chips, Nippon and ICICI.
So there are two ways of answering this, Samir. Basically, you already have some investments. In order not to diversify your portfolio too much, because there's also a question of having too many folios and managing too many investments. You could divide the current investments that you have of 1 lakh rupees into the existing investments only. Alternatively, I will suggest you two other categories and two other AMCs. So I would suggest you Motilal or Small, large and mid cap fund, and Mahindra Manulife multi-cap fund. Okay, because these are the two categories that I did not hear you mention earlier. So I'd like to introduce your portfolio to that. So 1 lakh rupees invested for about 5 years at 12% compounded annualized growth rate. You can expect about 1,76,000 from the new investment that you're planning to do. So I'd like you to just think a little bit on what you already have. The funds are doing well, and you could, invest equally into the existing investments that you have if they are been performing well. There is no need to have, a large number of portfolios and look at so many fund managers. If it's already meeting your requirements, you can do that. But I've provided you two more names, equally 50,000 each: Mahindra Manulife Multi-Cap Fund and Motilal Oswal Large and Mid-Cap Fund. So I think that should meet your requirements as well.
All right, with that, it's a wrap on the show as well, Nisreen. Thank you so much for taking time out and helping our viewers with their financial portfolio queries. And for our viewers, I'm going to leave you with our WhatsApp number and email ID, because just in case you want any suggestion, recommendation on your investment portfolio or any goal-specific strategy, all you have to do is just send across your question to us on our WhatsApp number or email ID. Thank you so much for watching. Goodbye.